rejection spike, right? So in this rejection spike, I've used this kind of rejection spike in most trading, and many of you guys listening to watching this video have used this rejection spike in trading, right? So it's a full complete trading word system. So it consists of what level of what support and resistance and a long wicked candle, right? I've talked about wicks. You guys know what wicks are about. So this rejection spike is a reversal formation and always occur at the nearby level of what support and resistance area. So price will push through a recent level of support or resistance area, but fail to what close past it. Many people call this rejection or fake out, fake buyers or fake sellers out. They will enter the trade and the market will go opposite direction. So this will cause a spike formation at this level, and from there the price will generally move away from that level and go back to where it was coming from. For example, we have an uptrend and the market, we may have a downtrend, markets tend to go up, and people say it has broken a breakout block or something like that. Then people will push in, it will leave the resistance area with a spike, and market will move back to where it is going to, which is bearish movement. All right, let me talk about what a rejection spike, a bearish rejection spike. Now, a bearish rejection spike will always occur when the market is moving upward to a level of resistance, right? So the price will move up and pass this level of resistance, then get pushed back down below this level of resistance, and the candle will end up closing below it. We also call it fake out or rejection. So the attempt of market to climb higher was denied by the sellers. So the sellers in the market say, no, you don't have to pass this level. We are heavier than you. So the sellers pushed into the market, and the selling pressure was more higher than the buying pressure. So the rejection spike candle can either be bullish color or bearish. So in the next example I'm going to show you guys now, I'll show you what I'm talking about in an actual chart. So it can either be bullish or bearish. So let me show you guys. And take a look at this first stuff here, right? This is the resistance area, right? Now look at this. Many people will jump into this trade by going buy. It has broken this area, you buy. Now what happened next? This is a recent resistance, right? This is first resistance, and people think that the market has broken the resistance, whereas they don't know that the candle has not yet closed. Even though the candle closed, they may just pass through it and come down. Now take a look at this now. What happened in it in SMC, that's smart money concept ICT? What happened here? That the market, the price has taken out the liquidity here, right? That's taken out the liquidity inside this place and triggered a lot of stop loss here. What happened the next place? Look at it. It left a spike here. Did you see that? So it left a spike here, and what happened next? The market went down trend, like momentum was bearish. So the previous thing I just talked about bearish, like this, like bearish rejection spike. So here now, you guys have seen how this occurs on the resistance area. So the market went down. Here again, it went down. Here, it went down. So here, this is a rejection. Price refused to close above this resistance area. This is where spike matters, right? This is where resistance, when you see resistance area or supply demand areas in the chart, you know. But this is where this matters. So you can do your back test on those areas and see this kind of action happening. Now let's talk about the bullish rejection spike. So a bullish rejection spike will occur when the market is moving downward, right? So don't confuse yourself. Bearish is when market is moving upward and trying to go down. Then bullish is when market is coming down and it will the buyers will take over and it will go up. So this bullish rejection spike is when the market is moving downward to a level of support. So the price will move down and pass the level of support and then get pushed back up above the level of support and end up closing above it, right? So the attempt of market to drop below was denied by the buyers. The buyers took over the market and say, no, you guys are not going to pass this level, right? So this is more buying. There's more buying pressure than the selling pressure. So a rejection spike candle can either be color blue or bullish or bearish. So in the example I'm going to show you guys, it's going to be bearish. Now take a look at this. A support zone, right? We have seen this in support zone. The market went up, retraced back, and did this kind of thing. You can see this kind of thing mostly on volatility indices, V75, 1000, V100, V10, 50. You can see this kind of thing. And if you don't understand this concept, many people will enter this trade. And what is happening here? The market is taking out the liquidity of this place, hitting people's stop loss because people went bullish. The market went up and they are still holding their trade. You come back and do the what? And hit their stop loss. And took out a lot of money that is stocked here. What happened? He left a spike. That is a bullish rejection spike. Left a spike, and the market refused to close here. The buyers refuses the sellers to continue. And what happened next here? Boom! The market what? Strike uptrend and moved to the original direction it was moving for. Right? So this was a support. Though the market came to retest the support and did this kind of thing, and the market what? Moved forward. So move upward. So that is that about rejection spike, the bullish rejection spike, bearish rejection spike. You can find these things on a support and resistance zones, right? You can find this rejection on support and resistance zones, maybe on a high time frame, 1 hour, 4 hours. If you know what they're doing, if you get this on 4 hours, you could scale down to 15 minutes or 1 hour, and the what? I can find another block there, or you can find a void, or you can find a gap there, which can make you trigger, which can trigger an entry, early entry on a lower time frame, right? So that is that about rejection spike in Forex markets. Thank you guys, and God bless you. ZagaTech FX signing off. Bye for now.